Morning, guys. This is Simon with Trade and Perform Coaching. Just real quick before I get started, I want to do the quick disclaimer. Past performance not indicative of future results. This is for educational purposes only, right? There are significant risks to trading futures. You can lose your backside. Have a trading plan. Again, I'm sharing my trade plan with you in hopes that it makes you a better trader, but don't follow me blindly. Not a great idea. Okay. Jumping in real quick, I want to go with CL, then I'm going to work my way backwards. Okay, so on the CL profile, this is my play CL profile, and I want to check my times to make sure I got them right here. I didn't adjust them. I did. Great. So on the US session, you can see this was yesterday's low. We were long from down here near 63.20. We're currently trading 63.50, and we stretched all the way up to 63.80. Okay, so if you look in this area, right, see how we're just from here. That's not what's supposed to happen. There we go. From here to here. See how with this huge balance area, you can draw a line underneath it. Okay. See how we just dipped underneath and came back in. And if you look to the right, there's another little balance area from here to here. So this area is acting as support for this area. So therefore, see how it's relatively poorly auctioned underneath here? You got to get below 62 in order to examine this, just in a broad sense, right? This, and this. So what we're doing here is just like what we were doing here. See how we had 1, 2, 3, 4 days of balance? Then we expanded energy, right? And then we went sideways. So there's one or two things you can do when you expand energy. You can have a build of energy. See how this, we came down and we had a sharp reversal because it was so far sunk and so many shorts dug in that we pushed really hard out of here, right? So you can have a break like this where it just pushes and then it consolidates. This is a whole block of consolidation, right? Right click. Okay, you can have a whole block of consolidation, right? So seeing between here and here, like if you had to say the market took off here, consolidated and took off again. So major support, right, most recently would lie between 60 and 58. Right? Moderate support would lie between 62 and 63. And now we're building a new level of energy building right here where it's either going to get above and push and explore these areas higher, right? Or it gets underneath this lip and we're going to come back through this area and come back and retest this support area. We don't know which one it's going to do, and we don't need to know which one it's going to do. We simply know that in order to test this area, you got to get underneath 62. And then you're going to use that 62 to 63 as backside resistance for a roll to the downside. But you're going to assume, at least I am, as long as we hold this area, that this area is support and that we're going to push back up, right? Since I'm not a fundamental analyst on CL, that's what my assumption is going to be. And I know that I have two key areas that want to get tested, the 64.90, which we've just missed, and then this 67.71 area that needs to be tested. There's some areas in between, but those are the big picture items, right? CL's trading well on a two-sided market, right? So I don't trade the first 30 minutes of the day. I just want to go through the econ real quick to make sure we have that covered. Let's see here. Let's get rid of that. And go to, get rid of that. All right, get rid of that. Get rid of that. Let's go to Rex Factory. And we shall see that we have 9 a.m. National Home Builders Association Market Index, right? And that is it. 8:15 we already had, 8:30 we already had. It's a pretty light day, usually calls for balance, right? So we'll see. What I do know is that there's been no sell pressure, even when we're getting downside moves, right? And the afternoons have been very tough to short, right? And it doesn't matter whether it's CL, NQ, ES. After that initial push down in all markets, right, we're being in push back up. So the way this all translates, right, if we look at yesterday and what worked, here's CL yesterday. You can see we have it drawn out. So see right down there at the bottom is really almost perfect, right? I didn't catch the short, but no problem. But if you look, it worked very similar on both sides of that coin, okay? See how we had a big push up, Okay. So see that big push? It encompassed a big area. So if I erase all lines from this chart, right, and I just look at this very basically. So here, let me get rid of this really quick. Easiest way to do this for me is to duplicate the chart settings, advanced settings. Okay. So if I look from at yesterday's trade, right, and again, when it's slow like this, all I want to do is get my 1 or 2 trades, be very tactically correct in where I find my locations, right, and trade. So if I look at yesterday and I go, well, what happened? What happened yesterday? And this applies to ES, NQ, CL, doesn't matter, right? I know I forgot one thing. It's got to be in the car. It's fine. I'll go out and get it in a second. So when I look at this, I go, hey, there's my last push up. Even if it's not my biggest push up, it was a big push, right? They got on top and they backside test and they try to hold, right? So what you want to say is when you get underneath that, see how you get when you get underneath that wave, that's where that long liquidation came to the downside down into support, right? Additionally, when I got on top, I'm looking for certain things that did not appear on that short, okay? So, well, actually it did. I just didn't take the short would be a better way to put it, right? So number one, I'm going to go through each step so everyone can see how the short developed, which I didn't take, and how the long developed, which I did take, right? So first of all, we have a fractal trend line break. Again, someone asked the other day, it was a great question. Why do I have 2 different sets of data to give me a trend line or where energy is being expanded and broken? And the reason for that is sometimes fractals don't show up. Sometimes my algo doesn't show up. So I can switch off between the 1 or the 2, or when they're working in concert, that's the easiest, right? This is my last major expansion in energy right there. This is my first expansion of energy to the downside, okay? And I have a little bit of conflict, but not really. See how we had all these, the algo was firing here early in the morning to the short side. And so this is the last place I had to push down. That you can add this one too. So see how when we got behind this, we pushed, right? And we pushed and we got a big delta wave. Fine, that's great. If you're looking for an upside break, that's what you were looking for. But then within that upside break, we got more information, right? Using auction market theory, Dalton, the latest information is the greatest information, right? So we ended up with a fractal trend line, an expansion of energy to the upside. If I was long above this, I just didn't want to really get behind this fractal. These 2 bars right here became really important, would have become really important to me if I was paying attention for the short. I wasn't because I was looking for the long, okay? So then, right, we pushed up. They attempted to push back in, and they defended the first time. Made perfect sense, right? All I know is I don't want to get behind this guy, specifically this guy right here. If you will notice, I then close behind this guy right over here. I get an expansion of energy to the downside denoted by the arrow, right? It's a specific formula. People keep asking. I'm not going to say what the formula is, okay? Gets behind. That traps us underneath. So now what we ended up was we got above, trap traders. You can see this little rotation here. See how that was the biggest delta? It wasn't a huge delta wave, but it was the biggest selling, and it was right on top, right? We get underneath that. That causes the long liquidation to come down and test the base of this move right here, right? They attempt to defend, fails, another expansion of energy underneath. Remember, I need to get above these expansions of energy to push higher, just like I did over here, right? We got above them, they pushed. Because I'm looking to get in as close to that break as I possibly can. Doesn't always work, but I want to get in and get paid, right? So push, backside test of what was the prior consolidation and break right here, right? So realize that these pieces, the tricky part of trading, we're on such a small scale, right, that it's all working in concert, and it takes time to put it all together in your head, right? Because you could have argued, well, Simon, we got above here, and I'd go, yeah, you're right. And what we're going to push right into is the last biggest wave up, right? And there's trap traders here. So you got to balance that picture, backside test. But follow this. Even if you had taken the long here, right, you still had a chance to escape with 8 to 10 ticks, right? Hypothetically, okay? We didn't take the long there. It wasn't an issue. We weren't confused, right? But what this is doing is backside testing that last big wave up. We should have never got underneath it. You'll see once they got the point of control underneath the last push up, that generated the long liquidation. And what you wanted to know that it was busted was a close back in with the point of control back in. I'm going to show you that over here. Okay, see how they finally closed with a point of control back in? And that's what triggered the upside move. Okay, I understand that it dipped back underneath and it took 3 closes to get it done for the push, but that was your first clues that they were going to push the other way, and this was your clue that they weren't going to trap back in because they couldn't get the point of control back in, right? And then we were watching down here. What we noticed down here is, see, all of a sudden we start getting, so now let's erase this for a second. All right, we'll throw our line back up there because we know that's where our last wave was. And now you'll notice when we get down here, look at the abundance of red arrows telling me energy is being expanded. I get the purple bars. Again, I'm not going to explain all these, but again, energy being expanded and forced to the downside. Fractals, right? We're getting underneath these fractals here. We're getting lower lows and lower highs, right? And then I get over here. So there's nothing for me to do here, right? I'm basically going through this area doing this. Right, I'm basically going down going, okay, I knew I was coming into support, right? Fractal, push, push, right? See how when the point of control is just over my last push, I get nervous. I like it to be pretty clear. It's just closer to a 50-50 thing instead of it's going to go, right? So I'm just marking these off as we're down here because I know I got to get above this, right? And then I get a big clue, right? This we saw. Look how big that push is right here. Look how big that delta wave is in duration and size relative to everything else. That by itself isn't a big deal, right? But now look at how much, look how little return for energy expanded, right? Because market's the expression of energy collectively. Look how little return we got for energy relative to what was expanded, right? And it was a very tight range. If we go from here to here, notice that when we got underneath these pushes, there's no fractals, there's nothing down here, right? That's pretty interesting. You get the biggest push and no expression of energy from the algo or from the fractals, right? So I know I've got to get above these two guys. That's parallel fractals right there, right? They're important. That right there, getting above that is important to me. Getting above these last pushes down is important. So then we come around over here and I go, hey, this is the bottom of that rotation, of that wave, right? So just like over here, right, in the morning, when I got underneath my last wave up, I got a long liquidation, right? I know that if I get above that wave, right, that I have a very, very good chance of getting a push back up. So I'm going through this slowly so everyone understands. I meant to do a trade review on it last night, and I didn't, so I'm doing it now, okay? So if you look now, what is the natural process? You got to keep putting this in your brain. Everyone wants it to be long, that simple. I can tell you where to buy, I can tell you where to sell, and you don't have to think about it. But it's this machine with all these cogs that are clicking together, right? So now I've gotten above, right? I've gotten above my biggest wave right here, right? I am looking to get long right here. I believe we got long 63.26. We're literally right at the apex right there, right? And I have two things that I'm competing against. So I'm going to draw this out because it's exactly the way I coach it, right? So first I go, if you remember, I said long 63.26, and then I drew this right here, right? This is my original draw, and I said 63, whatever that is, 13 is the second part of the trade. Then we expanded up a little bit, and I said 63.16 is my ad for an average of 63.21 was my average. And we got both of those trades, and then I said stop, low of the day. I think I started with a 63 stop, right? So what am I doing here? I've gotten above my biggest wave. I know that I didn't have any energy released down on this part. I don't know for a fact that that will be the bottom, but I know that I have an anomaly sitting right in here. The guys in my room know what that is, right? And then I know that I pushed. And then lastly, I know I got up just above this swing right here. Not completely, but pretty damn close. And most importantly, I've gotten above this wave. So long, long. And then what am I putting in my head? This is the important part. Really important part. So I want to put underline, dash, 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 exclamation point, exclamation point. I've gotten above my biggest group of sellers who could not push as an expression of delta any lower, right? So I know, so now translate this into human terms. These are sellers who were trying to push for a break to the downside on CL. everyone who sold in here, which was a significant number, I can see the ratio of buyers to sellers was heavily slanted to sellers there. And so I have to take a step back from all the information that I have from a technical standpoint and go. So there's a show. The easiest way to think about this is there's a show, and it's called If You Give a Mouse a Cookie. And if you don't have toddlers, you probably haven't seen it, right? But the show goes like this. If you give the mouse a cookie, the mouse is going to want a glass of milk. And so it pauses and gives the kids a chance to answer, right? So it goes, if you give a mouse a coloring marker, the mouse will want to color a picture, right? Kind of goes A, B. If you get above your last group of sellers, right? So if you get above your last group of sellers, they are probably trapped and will have to cover. That's the easiest way to think about that, right? Just like if you get below your last strong group of buyers, when you get underneath them, they're probably going to want to sell, right? It makes it really easy because then you can throw all this stuff, right, which helps us pinpoint our trades, away. And why is that important? I'm going to tell you right now. Because see this right here? We got this green arrow, right, followed by this push down, right? That purple bar is important to me. This purple bar is important to me, right? And if you were just looking at the trade, you go, but Simon, you say if I get above my last shove up, right, and then I get underneath it, it's a short, right? And this is where you have to go and stop and step back and go, but I'm above my biggest group of sellers. So what has the bigger weighting? So this is on the tiniest time frame I trade, right? This information here, right, overrides this information here. Just like, okay, just like over here, right? Just like over here, I got underneath, right? I got underneath my last wave of buyers, right? Therefore, right? So you want to follow this. Therefore, if I go long here, right, what's going to happen here? What's going to happen right here is all these guys that bought right, and gals that bought right over here, are going to want to offer back out. So I don't want to go long until I get back inside and then get some kind of retrace for continuation up. And just like that, just the same way, when I'm over here, even if I get great short setups over here, okay, I want to remember these boys and girls are trapped and they're going to want to cover, right? And so what happens here is I look, we're stretched. So we had, if we slow down and we think through it, we had a support area, right? I think it was light blue, but it was a support area, right? Number two, I think I actually have a picture of it. Let me see if I do real quick. How would I find that? Ah, I know, I posted it. Here we go. And I could care less what CL's doing right now. I'm going to have to see a change in character. I mean, ES. I don't care less about what CL's doing right now. Okay. There's a support zone. It's light blue. We know light blue, right, is a weaker support zone. So we need evidence, right? That's what I always say. Yellow, strong, right? And if you look, right, where these guys are getting exhausted, so we got additional information here. We push to the back of the anomaly, right, and roll down, and we test the next anomaly lower. So if you read Mind Over Markets, what does the market like to do? It likes to go from anomaly to anomaly, repairing the market. That's a concept like, how do you apply that in real life? That is like going from anomaly to anomaly is the same as checking up on your kids through the course of the day. Hey, how you doing? Right? So I know that's not great, but I don't have a better analogy at the moment, right? We're just going and tagging on it. Hey, how's it looking over here? Hey, how's it looking over here? Everyone all right? Okay, great. We can move about our business. We checked up on this anomaly, right? We came down, we got underneath it, backside tested. Notice it went right to the back of the anomaly, rolled down. We check up on this anomaly. Hey, are there any sellers here, right? So remember, that's a weak anomaly, could have been easily traded through. So then we need to translate that into what's going on in the market, right? So we take this area And the first thing I would say is, hey, this could break. That's a really big push. But then I go, but wait a minute. They made a big push. That was a weak anomaly. Should have been easy to break. Got big sellers. If we get above these guys, right, picture changes, right? So if you look, right, I get above these guys, right? Now I know I'm above that anomaly. I'm above my last group of sellers right over here. I want to be long, 63.26. 50.60 back, 63.16 I want to add. I got to stop if it breaks underneath here. What am I leaning on? The anomaly, and now I know there's a bunch of sellers and they couldn't break it. If they get back underneath, the story changes, right? Hence, I want to stop if I'm underneath there. Okay. Now, what do I have to do? Now I have to look at that and go, hey, when we get above a key area, it is very normal to get a bunch of pushes down. Why? Because these people who are pushing down right here, all right, the why is important. If we go back over here, okay, this is the 50-60 back up over here. We had to beat this to come up and check on these areas. Okay, so there's, remember, lots of people use fractals. By the way, we're rolling down a little bit in case anyone's trading. I'm not. I can wait till 10 o'clock. Not a big deal. So I know that I'm going to get resistance. Hence why I was trying to tag 63.44. I think I took 63.40 and then I closed it. I didn't get the 21 tagged after this. I just closed it at the end of the day for 50 cents. So remember, I'm long here, I'm long here, I'm leaning against this. Now look what the market did. We pushed back up into our biggest wave up, where we find responsive sellers and at the 50-60. But what people are doing here is they're looking and they're going, hey, we have an opportunity to get continuation here. That's what I'm trying to grab. Maybe they were drawing it off of this. Yeah, that's what they were doing. There you go. So this little area is the 50-60 from this draw to this draw to this draw, right? And people over here, which is very normal, you'll see it all the time, they get up over the last group of sellers and they try to shove back in. Why? People are emotional and they want the market to move and they want it to trend, and they're drawing trend lines and all that other stuff, and they go, hey, we broke this whole consolidation, we should go lower. And what are these doing? These guys are adding the last bit of fuel to the fire. Over here, again, this is a slow, drawn-out market, right? What you usually want is for it just to pop. It wasn't going to do that, right? It was just a grinder, okay? Then we push up into the 50-60, where, because there's a lot of people that trade the 50-60, including computers, we run into resistance. Remember, we're down to a quarter-size position or all out at this point, right? And then if you look how that played out, they finally get above. There was something back up here, I forget, but I think our target was somewhere between 40 and 70, right? And then if you look how that played out again in Asia, right? So notice they push down, they push down, they push down, right? You notice that you closest you get to a fractal trend line is going to be this right here. Right? See, once we got underneath, we couldn't get a shove underneath that fractal. We couldn't express any energy, right? And what we want, right? So what we're looking for when it's pushing up, and that you have to ignore on the switch to the bigger picture, is you are going to get behind, right? Because if you look at what's happened over here, what have we done now? Now we've trapped back into that wave where they were selling. We've trapped back in. And now these people are struggling, and there's just a fight because it's a narrow range between people who are trapped short and people who are trapped long is all it turns into. You couldn't really move one way or the other than for purposes of day trading, right? So if we scoot over here, pushes all the way up, and now if you come back over here, what have we done? Here's the US session. So I don't know where the anomalies are, right? But I can apply the same process. Here, my biggest wave up, right? That becomes important. I can draw a line underneath that, right? So now look at what happened. We get above, right? Notice I don't have any expression of energy to the upside except this fractal, and then I'm looking to get underneath this guy, right? Just like yesterday, right? So see how we get up? So if you come over here, right? We get underneath this guy, come back up for a 50-60, right? So we're putting all our tools together. 50-60 back, right? So they're fighting it out, right? I know that I got underneath this, and most importantly, I don't want to get above this, right? If I took this short here, I don't want to get above this guy. I really don't. My stop has to be back here, but I want it to, I don't want to be above this guy. We don't get above this guy. You see shove, shove, shove. Doesn't go anywhere. Look at that. See that one push back up, right? This push right here is equivalent. So remember, that's right this morning, right, is equivalent to these pushes down once we get above the last sellers, right? They're going to try and shove back in. These people came back over and tried to shove back in. It failed. And notice when that failed, right? So what we wanted yesterday was the equivalent of this. There's your long liquidation, right? Which, Daniel, I hope you caught. I'm sure you did, right? For the roll back to the downside, okay? And then if you look, what am I looking for now? A couple of components. Number one, just like yesterday, I know where am I on the chart, right? I'm at the bottom of balance still. See that from yesterday? There's my swing lows. I've just pushed just underneath. See how there's almost immediate. We came a couple ticks underneath. Late sellers, back above, right? And now I can come back in and go, oh, where's my last sellers? They're right here. What do I want to get behind? I wanted to get behind, if I'm aggressive, right? I just want to get behind this guy. We actually had a shove down, or gal, right? Close above. Now all I want to do is I want to get above this and not get back below, but my stop still, right? So we're in a very low volatility environment, but when the volatility opens up, if you try to use that like one tick behind, I spoke to someone yesterday who's trying to be masterful with his entries, exits, and stops and took 4 stops in a row. He was profitable for the day and he's very good at what he does. My suggestion to 99% of the people, don't try to be masterful with your stop. Put the stop in the right place, right? And let the market do what it has to do. And now what are we trying to do? See if it'll push back up. What does it have to do to do that? You're going to have to get, here's your fractal trend line, right? So we have a fractal trend line break, push up, and then what's the last piece? If that is to be the low, right? We would have a long here, which I don't right now because I haven't had time to think about it. And it's before 9 a.m. And we have to anticipate that they're at least going to come back and attempt to retest this 50-60, okay? And the whole cycle starts over again, just like they did over here, right? You could have had the short nailed, right? If you try to keep that stop right there, congratulations, you got stopped right before a 70-tick roll. Don't do that to yourself. It's my suggestion. Deleverage if you have to, but make sure you get your trades right, right? So now if we go look at this chart, which I'm going to minimize this because I don't need it, and we overlay everything. Why don't I have? Oh, there it is. Sorry, guys. So now when I look at this chart, and I get some context, so those are today's levels, right? So what's this? Blue zone. Blue zone's the weakest, right? There's my anomaly. That was actually a strong anomaly. You'll notice overnight, pushed up into the anomaly, rejected, got above, backside tested, bounced. Underneath the anomaly, what do you have now? An over and an under, right? So in addition, you have your biggest push up. Oops, let's undo that. There we go. So in addition, last wave up coincides with the anomaly. We're underneath it. He tries to shove up, fails. You get behind him. There's my magic purple bar. Long liquidation. Blue zone can be broken. Anyone who traded in this blue zone got chopped to hell, right? Sometimes it worked, sometimes it didn't. And what do we come down to? We just missed this anomaly. But actually, this is not an anomaly. This is, if you look at the notes that I put on CL, right? This is a big hole in the profile here. And if you look over here, okay, that is something's wrong here. No, it's not. Where's the hole in the profile? Ah, there we go. That is this right here. So what are they responding to right now? If you look to the left, these are unfair prices from 4 or 5. What does the market probably really want to do? probably wants to come in and clean this mess up right here. We put in volume in here, and then we get taken care of. This is a giant anomaly right here to the left. So what would I like to see ideally, right? I'd like to see us get underneath. We're probably going to chop in here realistically, right? And then I know if we get in here, I get back up here, and I backside test like that, and I get a long setup, but I have a very good chance of doing that if we can get in here to begin with. Right now, when is this going to happen? I have no idea. It could happen today at 10. It could happen at the close. It could not happen till overnight. I don't know. But when I see it and I get my setup, right, I'll look for the trade. And if you look over here, right, in the meantime, so I know what I really want to do is come down and repair this since we're down here, right? And that's competing with getting just below the swing low, which again, we're in a buyer's market, right? So when I'm taking the trade over here, I want to come in and balance my thought process out so that when I'm over here on CL, right? So remember, now I have to do some thinking, right? I know if I get above this guy, we push. So my long would be, right, hypothetically, here, 63.18, right? From 63.18, we've almost pushed a dime. We've pushed 63.27. And what's there? There's an anomaly there. It's a blue zone. It's weak and get traded through. But it is an anomaly. It is a support resistance area. And the market's responding appropriately. Now, what do I not want to get underneath? Even if I haven't scaled, which hopefully you have, right? I don't want to get underneath this guy. Because if I get underneath this guy, right? If I get underneath this guy, and then I close back into this right here. So I've got a challenge, right? And so sometimes it has to be clear in your head what you're looking for, right? So now I have to consider, are we going to come down here and repair this? Or is that for tomorrow? We're just going to miss. We don't have a weak enough market to come and test it. Sellers trap themselves, and I'm stuck. So what I would do here is this. I'm not very eager to short, right? Which means now that shorts in the hole become pretty aggressive for me, right? I'm going to have conflicting pieces of information because if that's a low, all it's going to do is push back into this 50-60, appear like it has a trend line break, trap sellers, and push. But now I'm getting a wave over here. So what do I want to see? The wave is going like this to this, okay? And it's a relatively weak wave, but it's a wave, right? So what would I want to see to short to push into this thing? Well, I wouldn't short to push into this, right? Unless I thought that was going to completely give way, which I don't think. Why? Because we're not in a down market. We have no momentum to the downside. But what I'd want to see is that come up here, right? Push up, get one of these little green arrows to show that they're expressing energy to the upside, get underneath it. If I short this, I'm going to slam into this 50-60 retrace. I'm going to get trapped. Plus these guys are still trapped over here, right? I want to see these guys get trapped. And in order to do that, I got to get underneath 63.08, get backside tested, get my setup, and then I'm trading 63.08 for 62.88 area, 62.92, which is possible. But really, if I wanted to be short and I wanted to be tactical, my short entry was either over here or over here. I don't want to start shorting over here until I see evidence that there's momentum to the downside. And we have, so we've already moved 63.80 to 63, right? The range has been between 100 and 150 ticks, right? So we already have 80 of the 150 ticks, right? And if I get stuck on a 100 tick range instead of 150, I'm going to get stuck and trapped on my short. So I'm waiting for them to pound it to the downside and get trapped, or I'm willing to take it long there. Okay, so hopefully what I'm showing y'all is I'm trying to put all the pieces together, right? And so I know over here, I don't want to short this because I'm stuck. Actually, I take it back. We haven't gotten over this yet. Getting over this requires me to get over this right here. So now I have to make a tactical decision, right? If I feel with conviction that we're going to come down and test that 63.88, I'm simply looking to get behind this guy, praying that 50-60 goes, and stopping above this, right? That's my solution. If, on the other hand, I think we're going to respond out of this, which I do, okay, I am looking to get this push down. I'm not going to worry about the short here. I already missed it. I'm not in a good tactical location. And then I'm going to look for this exact pattern, push down, get above it, and I'm going to try to slingshot that back where? Back to the mid and back to this point of control and possibly back to 63.74 if it'll do it. And why is that possible? It's possible because we have inventories tomorrow, and it's been up every single day going into inventories, we have pushed up overnight, and everyone freaking knows it. If you go back and look, almost consistently through Asia and Europe, they push up, and then U.S. session becomes a question mark, right? And then the response has been very, very minimal to oil inventories. It's been the lowest volatility I've seen in a long time. Those are the competing pieces I'm putting together. So the way you figure that is you write out what's important to you and what's not important to you. Look at the chart level. So I know this by itself is not a great area to short. Why? Because I can look to the left and go, wow, we've traded up and down through that all night long, right? I don't want to trade there, right? Now, if I take this, I'm going to acknowledge this could get slipped right through, and we put in a pretty good wave at the bottom, right? But we haven't gotten above it yet. So if I get underneath here, the only thing I could be thinking is we're going to break the low from prior day, come in and fill in this hole, or if we really get extended, 62.60 to 62.50, which would be really where I'd want to get it. That's an anomaly. I really would like to be long out of that area if I can get it. And the other thing I'm noticing, look at the first hour is usually pretty volatile in CL. If you traded it for any amount of time, you know it, right? Well, look at this. This is shit, right? If you're used to day trading CL, like what the hell is this crap, right? It's nothing. There's no energy there. Everyone's staring at each other. So we didn't get above the last group of sellers yet, right? I have gotten above my last push down. It has pushed for a dime off my entry, right? So I have a scale, and now I can make a decision. My decision would probably go something like this. If I got my scale for a dime, I'm going to move my stop about a nickel behind here. If we close with a point of control behind the 62 retrace of this little draw, I'm done because we're probably going to come down and retest this or this. Right? But I'm not going to bet when I come back to the profile chart, right? See how this is overall balance, right? So I want to show a very important concept here, okay? If when you're in balance, right, I'm going to show when it was a little more volatile, right? See how this is essentially the top of balance? This is essentially the bottom of balance. Right? Why? I'm just eyeballing it. Hold, resist, balance area, right? So let's say I'm right here, right? And I think the market's going to break, and what I'd be targeting, right, is this swing low, this untested settle price, Dalton's gap fill, and the mid of the half gap. All of that would be what I'm targeting, right? But I know I'm in balance. If I start shorting right down here, what has the market been telling me through all of this? Market's been telling me you're a loser if you've been shorting down here. Message is loud and clear. Don't argue with the market, right? You're hoping to get this. And even within this was a close at the end of the day over here. And if you tried to get this break all the way through here, every time it got down, so if you look to the left, it's another balance area, right? If you try to catch this break for this push all the way down into here, which would be the equivalent of pushing all the way down here where we currently are, notice that if you tried 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, right, that you only got the close at the 11th time, you got your ass kicked every other time you tried to short down there, and unless you held it and you never got the break, right, you would have had to hold right into settle price, which is freaking hard, and you're going to need this move just to cover your losses from down here. It's a bad idea, okay? It's much easier just to let the break come in. And even if you don't catch this, there's plenty of other trades to catch after that. It's really hard to break balance, okay? And usually when it does, it's gapped below. So if you look over here and all the people right now who are going, hey, CL's going to roll, right? So if we spread that back out, same balance area down here. And they go, hey, look, we're underneath this. And we've already tested the fill, and it's going to come down here to 62.57, right? But most importantly, you were at the bottom of balance. And right now the market's telling you, okay, if you're shorting below here right now, you're the idiot. Right now, you may be the genius today, but so far, every time you've pressed down and tried to press for a break of this area, it's only been 3 times, but we don't know how many times it'll be before it actually breaks. You're going to get smoked. So now I can calibrate again. Yes, it's possibly a short, but I'm going to go to my higher time frame, go bottom of balance. Not a great place to short. And even if we got down here, I'd still want to look for the long for the slingshot back in. Why? Because I know when balance breaks, we usually gap on the U.S. session, don't fill the gap, push back in. Therefore, right, and we're right in front of inventories. Therefore, if you give the mouse a cookie, if you give the trader a setup, the trader wants a long setup down here. Even if he has to wait till all the way down here to get it, the seller wants a long, the buyer, the trader, day trader, wants a long setup in this, not the short setup, right? And if you'll notice, everyone said, but we gapped here, right? But did we gap out of balance? Nope, we gapped in balance, right? So everyone got bearish down here, everyone got smoked, right? Everyone's getting bearish down here, everyone's going to have a hard time over here. And even if they get it right for a couple of moments, I still want to be long out of here, right? And I'm going to use, so I'm going to switch from this time frame. I'm going to take a gander at my 5 minutes, right? So I know where we are and what the charts look like, right? And most importantly, when I look at that 5 minutes, what do I see the most of in that 5 minute chart, right? Pull it in here. Let's do this. Chart, duplicate chart. It's the same for all markets. So you can look again and again. There's the short squeeze right there, the 36 pop, right? And again, you can tell I'm slowing down. I've gotten frustrated the last couple of days at the pace of the market. So I want to see the market rocking and rolling before I jump in. If you see a trade setup, guys, take it. I'm not that eager to trade today. Okay. The slow pace really wears on me. Okay. So if I take this and I erase all lines, I don't think that's going to do anything on this chart. So I'm going to go chart settings, advanced settings, clear this out, and I'm going to do this. Okay. So when I look at that chart, right, so here, let me expand this out a little bit. Now, let's just go through and look. I want to be a bear, right? I think the market's going to go lower, right? So I can see two qualities really quickly. Number one, around 10:30 every day, give or take, right? 10:30, 11. What I notice is every afternoon, right? So simple observation sometimes counts. Push, push. I understand we rolled, but that was literally the last 10 minutes of the day. I promise you. Go look. Push. Oh, look. Push again. So the long worked. Right now we're above our last sellers yet again, right? Push, push, right? So how has it been if you're a bear? If you're bearish after 10:30 in the morning on CL, right? Outside of the last closing minutes of the day, right? How has that worked out for you? My observation has been not very good, right? So guess what? After 10:30, I really, really, really am not interested, at least at the minimum, and not being short this thing. And that, again, you don't have to be super trader to figure that out. Break out your 5 minute chart and go, what have traders been doing with CL after 10 in the morning? And the answer is the gross majority of time, I understand there's been pushes in there, they're pushing up. So guess what? If I am a bear, right? If I am a bear, I understand there's been some down closes, but for the most part, right, I am smoked and I better get my move before 10:30 in the morning, because if I don't, right, if I don't, I'm going to get completely and repeatedly kicked in the teeth every single day. And we're all the way back into March right here. And every afternoon, the trade has been to be long. If you can show me a day, right? And so when you go through your setup, if you're trading oil, right, first thing you write, set an alarm, 10:30. I don't want to be short anymore. I'm looking for long setups. Now, will you get it? I don't know, right? But I know I want to ignore my shorts and grab my longs after 10:30, because I can go back now. We're into early March, right? People who've shorted the afternoon, there you go. There was victory, March 1st. They killed it. But since then, they've been in total pain. And if you go back through February was the last time where afternoon shorts, late day shorts worked. Believe me, I was pounding them to the downside. Okay. It's the last time they worked. And you can see we changed character there, right? Whereas you could short after 10:30 was still drifting down and you were getting pushes lower. But in March, that characteristic changed, right? And you'll notice it tends to repeat that characteristic, pushes down in the afternoon or pushes up in the afternoon or mid session, right? So the patterns repeat, right? And so what I know has been working in CL, number one, morning shorts have been working if I catch them on a stretch on the upside and they've been pushing down. When they push down into that 10-10-30 area on CL, I know in general, I want to ignore my shorts and look for my longs. May not work every time, but I've got the majority of the market participants hanging with me and I'm good, right? That's how you want to lay out your trade plan. So then you go, hey, I want to be long. Now, when the pattern reverses, you may either get stopped once or twice, right? You may even get stopped once or twice over a period of days, right? But then you're going to go, hey, we've closed on the low 2 days in a row. We've drifted down all afternoon. And you can go, ding, the pattern's changed. And then you can start going, you know what? We started pushing down. If I can get to an area that gives me location that I want, I get my setup for my algo, and I get my exit, entry, stop, just like yesterday. Now I can press to the downside in the afternoon and get closes on the low. But the market's not there yet. And the market will tell you. And because we're day traders and we're not moving billions of dollars around, right? We're moving nothing. We're not even gnats on the face of the market, right? We can wait and let them show us what they're going to do, and then we can just follow in their footsteps and collect the few dollars that we're making relative to what they're making, right? That's all you have to do. And you take that whole concept, right, and you apply that concept. Here, I can get rid of this chart. You take that whole concept, and now we take the same idea, right? So if you look yesterday, I'm going to do it with NQ now. And I missed the trade on NQ, by the way, yesterday, guys. So if I look at NQ yesterday, there it is. I already had it highlighted because I was looking at it last night. Notice Derek, in our coaching session, I talked about it. Lack of fractals at the bottom. We had one little fractal, right? So technically, you had to have something else to connect some type of fractal or energy expansion to the downside. That was that right there, number one. Number two, while it wasn't a big push down, it was in cumulative delta addition wise, it was 5 wide, which is a pretty good push, right? It's hard to get more than 5 consecutive in a row. It happens. They're usually 5 or 6 in nature, right? So I can draw a line over here. That's what I got to get above, right? That's my last group of sellers, and they were weak on top of that. They didn't even make a big show of it, right? So next, purple bar, right? What are these guys doing? They're shoving, they're shoving, they're shoving. So I can come over here, right? I goofed it. Apologize. I just did. Remember, no sell pressure. I kept saying there's no sell pressure in ES. Long, stop. Okay, now gets above my last group of sellers. Pushes down. Why are they pushing down there? My guess is that is a 62 retrace or 50 retrace from our swing. Let's go look. Because every schmo in town, including me, knows about the 50-60. And lo and behold, everyone starts thinking, this is the day it all falls apart, right? So I'm going to go a little bit longer because I want to explain this, and then I'll get to work. Maybe. Market doesn't appear to be moving very much. It looks like we're trend day / barely open for business, right? So everyone who goes and got bearish, right? Got bearish on the chart. So remember, on NQ, if you were shorting, you got bearish on a chart that is essentially one timing to the upside. Yes, we had value shift lower, right? But we didn't close underneath the prior day's low. We traded underneath the prior day's low, which is potential change in character, right? We closed above value, right? And so you were here while we were one timing, and you decide, and usually the rule of thumb is when you break one timing on the first day, that it'll close back into prior day's value area. Rule of thumb, not always happen, right? It's just a rule of thumb. So came in, right? You're going to bet that we're bearish and that's going to be the break, right? That's what people who were shorting there. So they come back over here, right? They are on trade. By the way, if you took that trade, right? See how we traveled through all the way through the blue where we trying to get back to that 63.50. This is an anomaly. It's going to get chopped all the way through. If you took your long, wherever I pointed it out over there earlier, you're getting paid. What was it? Right here. 63.20, 63.50. Right? Again, I don't care if I missed it. My goal was to be pretty relaxed today. Because I got pissed yesterday. I didn't get the NQ trade. And I'm too intense for a slow market. So, okay, switching gears here for a sec. Let's minimize this. I want to come back over here. Okay, so, right, I get above my last push down, representing my last set of serious sellers, right? They tried to push underneath this shove up. They failed. I get above my last group of sellers. See, when you get tired, you get over-focused in one area, it's hard to keep all this going. You get above, and what do I expect? So now I got to shift gears for a second. Forget this. What do I expect if I get above my last group of sellers? They're trapped. They're going to get squeezed. Came into the 50 retrace. Everyone goes, hey, that's the 50 retrace. I read about fibs. I'm shorting there, right? But what they didn't read about this. And Bill pointed this out to me. I totally gaffed this. I could have easily had the long. Right back to the 50-60 retrace. Backside test with the last push down. This is what's called a spring. Just FYI, if you're looking on a bigger time frame. These shoves down. These guys are trapping themselves. If we get above these guys right here, it's history, and that's what it did overnight. So Bill, congratulations. Bill nailed it. I didn't. I got CL. I didn't short it. I was smart enough to know that, but I didn't. I just missed the trade, right? Which is why I'm slowing down today, because it's important to put those things together. If you're going too fast, you can't. So that puts all the pieces together in one piece, and all you had to know after we got above this and above the mid of this, and right. So now I can come over here and look at this. I'm going to take this chart. I'm going to duplicate it, just like I did the last one. Take a second. By the way, we're in the mid of the half gap, which is a natural resistance point on NQ. You want to short it, be my guest. I'm not interested, don't care. Want to see them sell it so I can buy it. Chart settings. Okay, now let's go back to our basic question we should do at homework. What is NQ doing every freaking afternoon? Here, we don't even need a big. There. And how do you figure that out? Well, that's already going up, right? Afternoon. Afternoon. Sideways in this case. Afternoon. Pushed. Right? Afternoon. Pushed. Afternoon. Pushed. Starting to notice that even if they dip it down, that almost every afternoon, right? See how you can just draw lines over the afternoon time frame? Even if they push down, they're shoving back up every freaking day. There's the one exception right there, right? We can go back and look at it, right? I can see all the way back over here. We either go sideways or we go up, right? Actually, that wasn't even an exception. It went sideways again, right? Fell apart right at the end of the day. Up, up, sideways. Unless you shorted right to the end of the day, you got paid right there. But almost all of these are up or sideways, right? So what does that tell me? What I've noticed in my coaching, right? What I've noticed in my coaching and within myself. I like to anticipate that the market's going to do something, right? And then I look for the clues, right? And so if my anticipation is that, hey, it's got to roll down, right, which a lot of people have anticipated, okay, you start looking for those setups. So then when you get these short setups up here and you're like, oh, I'm getting run over, right? So what do you want to see to know to short? And I go back to every person I coach, of which none of, by the way, congratulations. I don't know anyone who's gotten crushed on this move up on the short side. No one. I think it's the first time I've ever gone through a market like this where no one got crushed, which is really cool. Okay. But what I know is until I see an afternoon, right? So what does it look like when it breaks is the question. Here, I'll show you. It'll take a second to load. It'll be here in a sec. Let's load a sec. Since I'm not in a rush and I don't care. Not today. If you need to trade, guys, if y'all need me to look at something, you gotta say, because I'm in such a chill mode right now that if I smoked a joint or I smoked marijuana, I'd probably go smoke marijuana right now. That's how freaking relaxed I am right now. I just do not care what the market is doing. I say, prove to me that it's changed. That's what I want, right? So now, what does it look like when it breaks? CL, NQ, ES. Well, hey, here's a clue, but it's a one-day clue, right? Oh, nothing changed. Went right back to a one-day wonder, right? What was one of the clues there? One day closed at the low, but did it close below the low of the day? Nope. Did it close below prior day's low? Nope. Okay, day two. Hey, look at that. Open drive lower. We're below prior day's low. Did we close below prior day's low? Nope. So what did it do? Broke balance, stopped one timing, closed back into range, right? So then you look over here, and all of a sudden, right, notice it's the same pattern. Morning sellers, afternoon buyers for the most part. There's exceptions in there. So what does it look like when it breaks? Well, here, let me take you back over here. Remember this when we were trading? And it was grind, 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 grind. Every freaking dip all the way through last summer could be bought and paid, right? So then we were cruising through and we said, oh, gap down, right? But notice in this case, we squeezed back into prior day's range. See that? Right on the close. Gap down, open drive lower. So watch. You think, oh, now it's bearish, right, Simon? Well, what it is now, what you'll notice, see this right here? This is the first shot across the bow. Volatility opened. See how the range is opened up? There's no range in here. Volatility opened up. That was 8:30 if you want to go look at it, right? But still no break, right? Whipsaws back and forth. Simon's happy. He's in happy land. I'm killing it and probably in both directions. Amen. Hallelujah. Raining manna from heaven. I make money in that. I don't make any money over here usually. Why? It opened at the low and keeps going, right? If it does this and keeps doing this, I don't get paid because I don't get trades and I won't short it, right? But I will short this. I got the break. I'm getting my setups. I'll take it long. And remember, not bearish. I'll take it long and short, right? And now look how the market has opened up, long and short. Open drive higher, no problem. They're going to pull it back down. I can get my longs here. I can get my shorts up here. I can get my shorts over here. I've got a booming two-sided market. And what happens to traders? So everyone, if you'll imagine this going back for months, making money month after month after month. What's your strategy? I buy the morning dip. I buy the dip. I make money. I make money. And I do it leveraged because it's been going on for so long. I'm going to keep leveraging up, right? I trade the same strategy. Oh, shit. Why isn't the dip working? Well, the dip is still working. It's just now the range is expanded, and you got to know, you better be better at looking for where the dip is coming in. Notice the afternoons are still damn hard to short in this. There's very few closes on the low, right? It usually is only a few closes at the low, and then it reverses. Now, see that? We're making money. So what am I looking for? Notice if I even miss that entire move right there, I don't catch a single trade. Look how long I'm getting paid for, right? Everyone who's traded me for a while knows I'm killing it here. I'm just as happy as a pig in mud, right? And then we go all the way over here, again, right here, and I'm like, shit, there's no range, right? It's getting tighter, right? All of this, they're going straight up, happy as a pig again, right? And then we're back to this, right, where it's just grinding, grinding, grinding all day long, right? Early dips are getting bought, and they're responding all the way back up. I'm not as happy as a pig. Why? Because if you look at this, right, so this is cool, right? That long isn't difficult to nail if you're looking for the support resistance area, right? And we had the long, if you remember that day down here or down here, I forget which day it was. Either way, the dips are working here, but the shorts are really hard to coordinate still. And the range, right, what do we keep doing? We keep pushing up, right? And it's hard for me to trade this right here, right? So I want you to look again. See that? Hard for me to trade because my gut tells me to go and look for the counter, which is never coming, or it's coming in one massive break, right? Versus over here, right? I'm going, woohoo, push down, trap back in, right? All day long, 50, 60 retrace, trap the sellers, right? Over here, see that? We pushed down, we came back in, shoved down, 50, 60 retrace, get trapped for the short, right? Come over here, 50, 60 retrace, right? You can tag it there because there's range, right? That's 66.60 down to 66.20. Hog heaven, right back into the 50. They trap themselves. Push up. Now I'm looking over here. We've gone above the swing. I'm looking for my first 50, 60 back for the long side trade, which doesn't come, right? Then I'm over here, right? So I know I haven't had my 50, 60 off the low yet, right? There's my impulse move. There's my 50, 60. Woohoo! Plug me in. They shove down. If we throw a delta chart in here, what you're going to see is a ton of selling right in there. They consolidated in there, right? And I'm getting constant rotations up and down over a wide range. I'm getting paid, right? So why does that all matter? Because as a day trader, there's markets where for different strokes for different folks, right? So there's a trader I know, not going to mention his name, but he kills it in this kind of market. You want to know why he kills it? He just keeps adding as the market moves against him into support, knowing there's no volatility and no range. And he knows one day he'll take a hit, right? But he just keeps rolling it down and down at key support levels and adding and adding and adding and adding and adding and adding till he's pretty big, right? And then he pops it out when it rolls back up. He's good with it, right? He knows what he's doing. I'm not that guy, right? And so what I need is this, so I know myself. This is where I make all my money, okay? The rest of the year, like yesterday, I made 20 or 30 ticks on CL. Woohoo. That's great. It's not bad, but it's not great either. And it took me hours to do it, right? Versus here, right? I may be in right here at 6,600 and gone at 66.60 in 20 minutes, right? And then I'm looking for my next setup. Let me say I'm going to pull back. Okay, I'm in here. I may not carry the wave all the way up here. I catch another 40 or 50 ticks, right? I may be short over here and catch 40, 50, and then I end the day with a 50 to 150 ticks per car, right? When it's all added up cumulatively and a shitload of trades, right? So when I was in here, right, if you take the number of trades I've done per day versus the number of trades I'm doing now, I'm not even at 5% of the number of trades and number of just total entries and exits, right, from scaling and adding and entering that I was over here. And so this is very, very important. If you don't get that the market goes through cycles and you don't know which cycle you trade great, that's what leads to boom bust. So the guys that are making all the killing through here, right, and they're going, hey, this market's great. I don't know what better you can do. I can get it, relax, I can have a drink, sit on the sofa, watch a movie. It'll go up, right? And then they wonder why they're broke over here. And all it is that they don't get is there's market cycles change, and it's usually advertised because you'll have one huge nasty day, right? Or you'll have one huge up day, and all of a sudden the character will change pretty dramatically. And I believe the Fed speaker was on the 26th or something like that, where he basically recanted everything he said before. And look how all the PA changed all of a sudden. Notice all the ups in the afternoons, buyers came back, right? And it just changed. Rotations down got small, relatively speaking, and they all got bought. And that's how it's been. And it still is how it is right now. And the market will advertise when that changes. And until then, what you're doing is two things. A, if you're shorting, make sure you're playing good defense and not going on tilt. Number two, you're taking key locations. Number three, which I've struggled with, is you may have to take scales earlier than you normally would want to because you're just not getting the extensions. And the other side of the adjustment is what I did yesterday, right? Hey, this is taking all day long. I'm going to have to park on this trade and wait and wait and wait and wait and wait. By the way, CL just followed the exact same pattern from yesterday. I'll use my other chart to show it. See that? Exact same pattern. Came down, right? They tried to short in the 50-60. There's my last push down. Got above my last wave. Closed above. Came back in, tried to sell it. I'm not sure if that's a 50-60 or not. And push, right? And remember, our entry was right here at 63. I think I said 20. Right? I didn't take it, but that's where the entry was. That's another 30 cents. Again, notice 4 months ago, 30 cents was a 10-minute trade. Now it's a 45-minute trade, right? To 2 hours. Yesterday was 3 hours, right? And so the last piece I have to adjust to is go slow down, right? I have to slow down, know that my longs probably going to work better than my shorts, be willing to take my shorts earlier, right? And be willing to take off my longs later, or press my longs, right? Then there's one last piece. Someone, very nice man who asked to be in the room, and he tried it out, and he kept asking us, Simon, you need to do a video on what your technique is, right? And I really struggled with it, right? Well, what is my technique? Well, this is my technique right here, right? And it takes time to learn. And what I got the feeling was he just wanted me to say, where do I buy and where do I sell, right? Like, how can I look at your chart in terms of, like, how can I take this chart over here, right? And just use this chart. What do the lines mean? Well, what this means is I expect resistance here, right? But I don't just look at the chart. It works, right? I can tell you. So here's yesterday's chart, right, on NQ. So there's NQ. If you'll look from yesterday, blue zone, easily traded through here, traded through here, right? But it is a support resistance area. You'll see how they try to hold it. See how they try to hold it? It's through, and it acted as backside support, but easily traded through. Yellow zones are strong, right? What did we get here? Just like the short, the over, under, right? We got over, backside tested to the, didn't quite get to the anomaly. It was too strong, right? And then push all the way back through the range, and it's poorly auctioned. So if you're asking, hey, what's your technique? My technique is the work I do intraday to go, hey, I know I'm near an area over here, right, of support, or an area of support down here, right? Or I think this is the hole in the profile, either way. And I'm on a stretch. So my technique is I'm looking for a stretch. I'm looking for sellers to bury themselves. And this chart by itself won't tell me that, right? But this chart, right, combined with my knowledge of who's in control of the market, right, combined with I know that I'm looking for where my edge is, which in this case is I'm not shorting afternoons right now. If you'll notice yesterday, I just said there's nothing for me to do. I'm not going to short it, and I missed the long on NQ. I had the long on CL, and I just trailed it, and I just simply said, ain't freaking shorting the afternoon. That's all there is to it. It doesn't, the odds are totally against me. I don't want to be the guy that gets it right. So some guy, give you an example, right? Some guy bet $80,000 that Tiger Woods would win the Masters, right? It's a long shot. He won 1.6 or $1.4 million on his $80,000 bet, okay? It happened to be, if the story's to believe, the only time he's ever bet on golf or any sporting event. Well, that's a nice fantasy, but I call bullshit on that, but whatever. Okay, it's a nice story. But he got it. How many times has Tiger Woods played in the Masters? How many times has he won the Masters, right? And you're still looking at best. I don't know how many Masters he's won that he's actually played in, but it isn't 100%, right? And he's lost more than he's won, if I'm correct. Correct me if I'm wrong, right? I'm not a big golf guy, so you can just yell at me and say, no, Simon, you're an idiot. You don't know what you're talking about, and shut up, okay? But what I know about this is that was a long shot bet. But I'm in the business of pulling the money out on a daily basis, right? Okay. So I don't want the long shot bet. You know what I want? I want the high odds bet. I want to bet on the thing that's going to happen over and over and over and over and over again. So you know what the bet I want to make is? I want to make a bet that the Masters will be played this year. That's the bet I want. I want the bet that says they will use golf balls. And I will be right this year, right? I want the bet to say there'll only be one winner of the Masters tournament and be right. I want the bet that says at the end of the Masters tournament, they will put a green jacket on the guy. That's the bet I want to make. Why? Because I don't want to get annihilated, right? Now, I understand those are all 100%ers, right? And that doesn't work that way. But I want to get my odds high. I want to align my thinking with what the market wants to do. And then I want to say, maybe they'll give me an opportunity, right? And then the last piece, and the piece I've really been struggling with, is I don't want to fight what's obvious, right? And what is obvious is right now in this market today, no one wants to sell. And there's a great book there's a great quote from Mark Weinstein, Market Wizards, right? And he's strongly opinionated as many traders go, right? And he says the market went down. He goes, something that really annoys him is when TV comes on and says the market went down on profit taking. And he goes, that's bullshit. He goes, the market never goes down on profit taking. He's like, who the fuck sells on profits? No one's motivated to do that, right? If you're long NQ, look at that, right? Do this chart. If you were long NQ, and that's only to March, right? Where did you sell? Where did you sell where you felt good about it? No place. There's no place since December 26th that if you sold your NASDAQ position, you feel good about it. Okay? He goes, markets go down on loss taking, not on profit taking. Right? I want to say that again. Markets go down on loss taking, not on profit taking. So what has to happen? Right? So look at it this way here. Where's my other chart? Did I still have that 5 minute up? This will help you think about the market. There we go. Let's change time frames. That's enough days. Anyone sees a trade or sees something like, hey, Simon, you need to look at this quick before the freaking sky falls? Tell me, but I've been watching my eye. I think he's up between 30 and 40 points, and ES is barely moving. Okay. Where do markets go down? Got behind my last buyers. I don't know why I can't draw that to the right, but whatever. Here, use this. When I got behind my last buyers, I found some sell pressure, not much, right? Because if you look at that bigger picture, still no one's under pressure, right? Market went down when I got under my last buyers. Just a little bit, not very far, because no one's trapped still. See how we're bringing this picture back up, right? So where do markets extend down? Is that 200 days? That sucks. Here, let's do this. No, not 6,000. That'll take forever. We'll just do it this way. It'll take a minute to load, but we'll get the data. I know I looked at this chart last night, and I was like, yeah, I'm an idiot for trying to short this until I see some sell pressure. Maybe NQ closing negative after gapping up. That might be a sign. On the low of the day, below value and gapping down tomorrow. That might give it, hey, we have a two-way market, not a down market, right? Two-way market. That's good. I'll short and go long, right? Take just a second to load. Whew. I don't think my computer likes to do this during market hours. Thank you, Bill. Let's stop 30. 10 points. Hold on. Let me go look. We're going to pause the story for just a second. Got it. Okay. Bill, where's your stop? 69? I mean, 89? Bill just sent me a message. The market should roll down now. This was the break. That was a shove down. See ya. Great call, Bill. Nice job. And there's your roll down. Thank you, sir. Good call. Okay, so I want to show you this, if this will pull up. Here we go. So outside of our nice little, we can pinpoint our trades, right? Where does the market actually roll down? Wow. Look at that big block here. See that? trend line here. Wow, we got underneath all these guys, right? What announced it? Wow, range expansion, right? Now if I look at this, where's the stupid bar? Ah, there it is. Now look at two-way fat awesome markets, right? If you look back over here, right? Where do markets go down, right? Gap down underneath sellers, they attempted, they pushed back up. Now we got to get underneath these guys. And you'll notice every time you get underneath that little lip, that's where, but notice most of the time it doesn't do this. Most of the time it's under your last group of sellers and buyers who got trapped, and they long liquidate. Underneath the buyers, they get trapped, long liquidate, but right into support. And then when you get under a whole group of traders, notice this is getting under a group of 2 months of buyers is where it long liquidates, right? So it's all relative, right? As you go back through that chart, right, and you look at that chart, right, where are we going up? We're getting under our group of we're getting over our group of sellers. Where are we going to go down? We got to get it underneath here. Nope. Got to get it underneath here. Nope. 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 Right? So finally, after how many days of consolidation is that? If you look at it right there, there's the gap down, there's the expansion in range, there's your two-way trading, right? Happened pretty quickly, right? See how it went from, so now you can see how the guy who goes, oh, I've been long since March, right? What do? I buy every dip, right? I'm a king. I'm going to be a billionaire, right? And then you go, which, by the way, in fairness, I suck at this, just so everyone knows. When it goes straight up, I suck at it, right? And I rock in that. That's where I make all my money. So if you're asking where I get paid, right there, right? And on the upside usually, but once the dips stop, like all of that is fantastic for me, right? And notice where's it liquidating? When you're getting underneath your last, see that's multiple days, right? That's a 30-minute chart. Multiple days, you're underneath your last buyers. They're taking losses. You get underneath this lip right here, right? They're taking losses. Get over this right here. Shorts are taking losses, and buyers are coming in with fresh cash. It's different on the long side than it is on the short side, right? Right over here, right? If you draw a line under this, right here, there you go. You draw a 50, 60 back on that. People will really feel trapped if and when you get behind this. Right? So if you'll look how that works, right? You'll notice, so we drew up a little more. See how we never get back to that? And therefore, the trend continues, right? I understand that we pushed down and we got underneath this group of buyers. They took losses. Once their loss taking was done, they pushed into support off to the left, right? A bunch of sellers came in. Here's all your sellers. They have to cover, right? Just keep in mind, market goes through cycles. It always has. It always will. We're just in the part of the cycle that says the short side is hard, the long side is easy, and we will know it because we'll go into a rip-roaring trade to the downside. And that is what we look like right now. So notice this, notice that. I have a very hard time in this, even though I'm squeaking it out. I have a hard time in this, okay? But if you'll have a trade plan for this and understand where you are in the cycle, you won't get annihilated trying to short this. And if you're a patient trader, which Ron, who's one of my coaching clients, and Peter, very, very good on the patient side, right? And they kill it. It's just not my strong suit. So trying to think if there's any freaking thing else I want to say this morning besides getting rid of this chart. There isn't. CL still pushing. I think I can push all the way through it personally. We've built a nice call on the break there. Again, the thing I'd also like to point out, let me arrange all these charts. Here's my tick chart. Again, if you'll notice, we're not even hitting negative 600 tick, right? There's no sell pressure. I understand that we rolled down, nice call, Bill, but this is my hesitancy to short. If I load this up, here I'm going to do this in a 5-minute chart. so I don't have to pull tons of data. Let's do a 10-minute chart settings. This will take a minute. Let's just load 600 days. Give it a minute to load. We'll draw back over, but I'll show you this one last thing. What you're going to see when I pull that data is that when the market gets swinging, we regularly hit negative 1,000 ticks. We'd regularly hit positive 1,000 ticks, right? Minus 600, negative 600. That is a swing trader's delight. You can stay in the trade all day long, right? There's just no speed involved in the market, and it's hard to press down. Shorts are going to get trapped. And what am I looking for in NQ? So what's driving the market higher? So the market's extended, right? We all know that. Your overbought indicator, you're going to have to find another overbought indicator because it doesn't get more overbought. Here we go. But I'm going to go back to that. So see this right now? Now look at December. Okay, so here, there we go. Okay. See, this is August. So look how that's expanded. See this? This is August, right? So late August, we start to expand. See how we're starting to stretch down to these minus 1,000 plus 1,000s? The rest of the time, it's mostly minus plus 600, right? Now look at October. Look at the range of the tick that's gone, right? See how that's, look how big. So what I'm pointing out, look how big this is, right? Look how tiny this is. Some 1,900 ticks, some 900 ticks, not much, right? Range pretty tight, right? Scoot over to October, November, December, right? Day trader's delight. January, we start to come in, right? March, we got a little bit bigger. And now what you'll notice is, as of right now, just barely any 1,000 ticks on the upside or on the downside, right? It's just tight right now. And so trying to make and so remember, shorts, sellers need speed and motivated sellers to help their position, right? Longs don't need that. Long markets can go up in the absence of sellers, right? You don't need a lot of buyers if no one's offering, right? So think about it. Think about it if you're going to buy a car, right? And we'll use two examples, okay? One car is a 1967 Ferrari GTO, raced at Le Mans. There's 2 existing copies left, okay? And there are 10 people who want to buy it, right? 2 cars, only one's being offered for sale, right? And 10 people want to buy it. Price of that car is going to go skyrocket, right? Now let's take the other side of the picture, okay? A Ford Fiesta, okay? Let's say sales have slowed down and there's 10 people that want to buy a Ford Fiesta. But every dealer in town has 200 Ford Fiestas sitting on his parking lot, right? Guess what? That price isn't going to go anywhere. They can buy it all day long. Now, the guy with the Ferrari, right, to make that price increase go, all he has to do is get rid of the other Ferrari, and then that price goes up even higher because now there's only one, right? He simply has there's the absence of sellers or inventory available, right? So all that has to happen to continue to drive this market higher is for everyone to say, from hedge funds to, remember, the majority of market participants and indexes have to be long, right, and have to be invested, right? It takes a lot to get them to sell. They are the bulk of the market, right? But in order to motivate even the marginal players, right, all you have to do, even if there's just a trickle of money coming in the market, forget all the IRA money, all you have to do is everyone go look around and go, I don't want to sell, right? Because every time I think about selling, it's up the next day. So what's it going to take me to sell? I'm going to have to see it like going down multiple days in a row. And even then, what am I going to think? It's a buying opportunity. I'm going to buy it, right? Short of fundamental news changing, i.e. 9/11, some kind of war, something fundamentally changes, right? And it has to, in this case, it would have to be catastrophic and overnight, right? Or a longer stretched out 2008 scenario, right? But without those two components and without getting below in an expansion and tick, it's going to be very hard to motivate a consistent downside move. Whereas if I can get a good long side, if I do get them to push down, I can get a good long side move, I can sit there all day and I don't need a big tick up. I don't need a lot of buy pressure to come in. Why? I just need the absence of sellers to push it higher, right? So that's my 2 cents on that. I would keep an eye on this. I need to change this chart to a 3-day chart, or I will log my computer down and switch this back to 1 minute. There we go. And what I have when I look at my 1 minute chart now, right? If you can see, even a couple days ago, we had more downside pressure than this, right? So yesterday, I want to see a change in character before I commit to pressing the short for anything more than a scalp, right? Because that's the NYSE tick. There's no one there selling. And I know when there's no one there selling, even if I nail the short location, right, I need to cover pretty damn quickly. And that's where I've been having a hard time because I'm not getting those legs down. So anyways, that's my 2 cents, guys. I went way longer than I thought I would, but I needed my own refresher to get in alignment with what the market's doing. I obviously probably missed my one entry on CL because I'm not willing to short it at the bottom of balance. If it goes to that 62.50, I'll just buy it down there, right? I'm not looking to short. We're already pushing 957, and I know most afternoons on CL have been up. So why am I going to rack my brain trying to get a short? The answer is I'm not, right? And then when I see a change in character in any of these markets, I'll know it. Why? The up and down will be fast in the dome. You'll see the dome jumping like a jumping bean, right? I'll see 20, 30 points down, then 20, 30 points up in minutes, not hours, right? I will see us sell at the end of the day, close at the low of the day, gap down the next day, drive lower, and then be unable to get above that day's high. The 50-60s will hold almost every time. I'll get big, instead of getting, when I get to a 50-60, like right now, if you look, when we get to a 50-60 on NQ on the short side, right? So let's say on the, well, whenever it was down, like here, right? So we can look here. When I get to the 50-60 over here, we'll just use this, right? It's going down, but really not killing it, right? And I can't get any extensions to the downside. And when it breaks, right, the breaks are just flushes. No one's trying to step back in. It's just one seller coming in, right? When he's done or she's done, all up, okay? And I will see that change. What we'll see is we'll get this, then this. So it'll look like this. Oh, wow, wow, wham. Back to test the low, maybe break it. Back to the mid, and then sell at the end of the day. Or it'll be bam, 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 bury everyone midday and slam it back to the mid at the end of the day, right? But it'll be big, and each of these legs will be 70, 80 point legs. These will be 30, 40 point legs, right? And these will be 50, 60 again. They're big legs, right? That doesn't describe what we're looking at right here, right now, right? It just doesn't. I want to change this off to the US session. So that's my 2 cents about that. And my suggestion is just take a deep breath. We'll get paid big again. In the meantime, we're collecting pennies, right? 20, 30 cent pennies, but not a ton of trades, right? And let's get rid of all that. And let's scoot this off to the side. And that ends it. Any questions, guys? I have it recorded. You can see it on YouTube, so I don't have anything else to add. I'm not shorting. That's all there is to it. I'm not shorting NQ right now. I understand that it could roll lower, and when it announces itself, right, I don't want to be the guy that's perfect to get paid when I can be imperfect and get paid on the long side. Okay. And I can get paid big on the long side if I get patient. I missed it yesterday. I was focused on NQ instead of CL, but I mean CL instead of NQ, but it matters not, right? So that's my 2 cents. Why is this chart I have two of these charts? Oop. There we go. Now that's fixed up. And let's get rid of the last few charts we opened up. Where is it? No, don't do that. No, don't do that. Okay, I guess I'm all right. No, no, and no. File, save all. Okay, so if NQ goes to 0, turns negative, I see a break. By the way, that is out of the white zone. Bill has a valid point too, right? I just need to see a short actually work for me to want to invest in it. By the way, this is the last shove up. If you close underneath this, right, you are at an anomaly if you're looking for a CL short, right? There is actually room now to 62.50, hypothetically at least, right? And here's your last buy wave up, right? So you want to get underneath this buy wave up. And what's ideal is if you can get underneath this last buy wave, get one more push up and then close underneath, and then you can steamroll through that 63.40 for a retest of the low. Again, you're in the bottom end of the range. I'm not crazy about shorts there when there's no momentum to the downside. So anyways, I'll be back in a couple minutes. Any questions, guys? Guys on YouTube, that's about as good an explanation as I can make of my trading methodology. If you'd like to check us out, send me an email, tradeandperform@gmail.com. It's in the description of this video. Anyways, I hope everyone has a great day. I'm looking for one trade to make some shekels to pay for lunch. Maybe two trades. So anyways, I'll talk to everyone in a little bit. Actually, I'll talk to everyone on YouTube tomorrow, and I'll be in the room in just a second.